Hey guys, and welcome back to my channel. If you're new around here, thanks for stopping by. My name is Tolu, and on this channel I share content all around how to live your best life on a budget. So in today's video guys, what I'm going to be doing is bringing you season 2 episode number 7 of my Instagram live series T Money Talks. On this episode I was joined by the amazing Clarence over on CK Talks Money, where he shares loads of content all around personal finance, how to get on a property ladder, mortgages and so much more. But in today's episode in particular, we spoke at length about how to get mortgage ready. So he shared all about the things you need to know before getting on the property ladder, once you're finally in a position to start looking for a property, and so much more. There was so much that we went into in this conversation, so you're definitely in for a treat. So like I say, every single week, grab yourself a drink, grab yourself some snacks, grab yourself a pen and paper so that you can take notes, because he shared so many gems in this live, and there's definitely a lot that you can take from it and definitely apply to your life. With that being said, I'm not going to take up too much of your time. I'm going to jump right into the conversation that I had with Clarence over on CK Talks Money. Thanks again, like I said, for coming on tonight's live. For the sake of, I guess, the guys that don't know who you are, what you do, in your own words, tell the guys a little bit about yourself and about what you do.
Yeah, of course. So I'm Clarence from CK Talks Money. Those who follow my page would know that I run a platform where I just give tips and, you know, bits of advice around mortgages, mainly mortgages and credit scoring. I try and dabble into other areas when I can, here and there, when I can be bothered. But my main thing is mortgages. You know, I was a qualified mortgage advisor for 4.5 to 5 years. I did that for a while. I've been working in the financial industry for about 9.5 to 10 years now. So yeah, that's me, and I'm blessed to be in Tolu's presence today.
Oh, please,
yeah, I'm good.
Experience. So get your questions in the question box now. Like any finance related questions, CK is going to answer them for you. What do you prefer, CK or Clarence?
Either doesn't matter. Either, yeah.
Clarence, because I like that name. So I'm going to call you. No, it's good. Yeah, no, thanks for the introduction and telling the guys a bit about yourself. So obviously, like I said, we're going to be talking about mortgages and getting mortgage ready. But before we really dive into the meat of the conversation, if you've tuned into any of these episodes, you'll know I like to do a little bit of an icebreaker before we get into the main meat of the show, to kind of ask you a few would you rather questions. So what I'm going to do is give you 2 options, would you rather A or B, and you kind of tell me what you'll do. For the guys watching at home, if this is one of your first time watching it, you can play along. If you've watched a number of these episodes, then you probably played it already and answered these questions. But anyway, you can join in at home as well and say A or B. Okay, so for the first question, you ready?
Yes, let's go. Let's get it.
Right. So for the same amount of money, would you rather have a job you love but have to work 60 hours a week, or have a job that you don't like very much, in fact hate the job, and work 40 hours a week? So the job you love, 60 hours a week; job you hate, 50 hours a week.
For me, that's the easy one. I'll do the one I hate. Reason being, I am big on my time. And even when I think of my idea of being successful, a lot of it has to do with how much time I spend at work and how much time I can actually spend with the people I love. And if I'm doing 60 hours a week, it doesn't leave much room to do the things outside of work. So I'll probably do the one I hate. I'll probably then continue to pray and try and win the lottery and leave both the jobs. But like that's eventually. But if I do, it's the 40 over the 60.
The 40, okay, that's an interesting one. Yeah. I think you answered it quite quickly as well. I thought it would be one that you'd have to think about for a bit. But okay, that's
and this
cool.
wasn't premeditated, anyone, by the way. This is all live. This is all.
Yeah, no, definitely. He hasn't seen these questions before, so no, that's an interesting answer. I think I would go for. I think the job I love, you know, depending on what the job was, like what I'm doing now or working with people, the coaching kind of thing, I think I could do that for 60 hours a week, because although it's work, I enjoy it, so it doesn't feel like work. So in that respect, I would like to do that. But then saying that 60 hours a week when I've got kids and the family, it's a lot of time.
It's a lot.
I'll need a bit more balance than that. So no, I totally appreciate why you gave that answer. Okay, so the next question. This is an interesting one, actually. In a conversation, would you rather, number one, always have the first word, or always have the last word?
Cool. For me, it's definitely last. You know why? Because I feel, especially if it's a group setting, you give people the chance to talk rubbish before you then come in. You know what I mean?
Before you come and finish them off.
Yeah, like, so if it's something that's going to turn into like a debate, while you're talking, I can kind of think of my counter arguments, what you have to say. So yeah, definitely not first. Definitely not first.
No, that's a very good point, actually. Yeah, I think I'd like to go last as well. I like to always have the last word. Yeah, I'm like that. Yeah, and that's my husband saying B there. He likes to have the last.
I see him.
Not like
I see him. I see him.
Okay, next question. Would you rather buy everything you want but have to work full time for 50 years, or have half of everything that you want and work full time for only 35 years?
Have everything I want and work full time for 50 years, or have everything I want and work full time for 35 years?
Yeah, so you have half of everything that you want.
Have half of everything I want.
Yeah, that's the second option.
Oh man, you got me with that one. You know what? Yeah, purely based on, once again, it boils down to time. Like, if I have a choice to work 15 less years and only have half of what I want, then I'll probably go for that, personally.
Yeah, I'd go for B, definitely.
Yeah, I think.
Yeah, you can't. What is this everything that you want anyway? I mean, I need to quantify that. What is that? I need more context. So, yeah. Okay, cool. Next question. Would you rather get £100,000 for sure, or 50% chance of getting £10 million? Right, there's three options, actually. So would you rather get 100,000 for sure, or a chance of getting 100,000, 10 million, sorry, and 50% of the chance getting nothing? Right, so there's three options. 100,000 for sure, 50% chance of getting 10 million, or 50% chance of getting nothing. No, I'm saying the question wrong. Let me say it first time.
Cool.
Okay, so would you rather get £100,000 for sure, yeah? So that's one option. And the next option is basically 10 million or 0. So it's 50-50.
I think, you know what? I think I'll take the 100 grand for sure. I'm not.
Really?
Yeah, you see that? It's very easy to be part of that other 50%. So I can't lie. And I know, the thing is that, definitely the 100,000. Definitely.
Really? 10 million though?
10 million or 0.
Yeah,
Like, that's the thing, like. So that one I have to use. Obviously, the 10 million sounds great, sounds amazing, but 100 grand, I'll just take it. I'll take it.
I don't know. I think the risk taking me might just try that 10 million, because that's 10 million.
And if you get it, then fair play. But
do you know what I mean?
The 0, it's not attractive.
Now, do you know what that reminds me of? Deal or No Deal. Did you used to watch that show?
Yes, I did.
Yeah, I think that happened many times where people are like, "No, it's in my box. It's in my box."
Just open up box and see 0. That's it. Nah, man, long too.
No, fair enough. Okay, cool. I'll do one more then. In fact, two more, but I didn't get it. So you've just received £10,000 gift. Do you pay off your debt or invest the money?
£10,000 gift. Do I pay off my debt or invest some money?
Yeah. So someone just said, I just said, "Hey, go. Here's a check, CK, for 10K. What are you gonna do with it? If you got £10,000 worth of debt, are you gonna pay it off, or are you gonna take that 10K and invest it?"
The thing is, the way that I'm thinking about the debt is that every month the debt is probably costing me quite a bit. I'm just assuming that this is high interest debt and it's costing me quite a bit every month. And if that's the case, I might actually pay off the debt.
Really?
Yeah, because the thing is, I've had loads of conversations with one of my friends about paying off debt versus saving and stuff like that. And I feel as if debt just kind of like feels like a weight on your shoulder. So I feel like I'll probably pay off the debt. But then again, I say that now. Give me £10,000 tomorrow. You'll see what I'll do.
See what you actually do with it. You know what I mean?
This is it.
Okay, thanks, Wigzing. She's like, "I'll invest. I haven't got debt." No, but in this scenario, you have debt. In the scenario, you have debt. So what would you do about money? Okay, and then just the last one. This is a nice, light-hearted one. Would you rather live without music or without the internet?
If the music means that all the music that I like will somehow get to me without the internet, then I'll live without the internet.
Really?
Yeah, listen, I can't lie. There's no way that I'm going to spend my life scrolling through Instagram and not have Afro beats. I'm sorry. Like, I'm sorry. Like, I need to... The internet can't help me in that department. But if there's a way that the music can get to me, because the music I listen to comes from the internet. So if there's a way that the music can get to me without the internet, then I'll choose the music over the internet.
Wow. Nah, internet for me all day. I'm not actually a music person. Like, I listen to it, but I can definitely do about it. I can go days without playing music. I only hear music when it's like on Instagram or something, you're watching a video and there's music in it. But I'm not that play music in my house kind of person. Never really played music.
No, I'm big on music. I'm big on music. Definitely the music for me.
Okay, cool. Thanks for playing. Thanks for being a good Okay, so now it's time to get down to business. So
Yeah.
let's talk. So we're going to be talking, first of all, I guess, a bit more about your story, hearing more about your journey before we then go into the other part of the conversation, which is talking all about mortgages, etc. So I guess
Course,
just to begin with, just to give the guys a little bit more of a background, tell us a little bit about your story, what your relationship was like with money growing up versus now. How has it changed or not changed? And your views when it comes to money. It'd be good to hear a bit more about what Clarence thinks.
Yeah, no, definitely. Well, that's an easy one for me. My relationship with money from young was rubbish. It was rubbish.
Oh, okay.
It was, there's people that are like spenders. I wasn't even a spender. I was a waster. I would waste money. So it's like, it was weird because I used to have like this thing where I used to feel as if when I have money, I had like an itch where I just had to spend it on something. Like, and I don't know if it was I don't know what it was, but it just wasn't good. So over the years, I've found myself in certain situations and realizing that money does need to be saved. You need money for a rainy day and so on and so forth. So that's when I started to kind of, in a way, be smart with my money, let's call it that. So somewhat protect, of course, you save, but also into the world of investing and so on and so forth. So yeah, growing up, it wasn't great. It wasn't great. Like, especially my uni days, it was shocking. Yeah.
Enjoyment.
Too much of it. Too much of it. Like, I'm telling you, it was bad. Like, really bad. But yeah, we grow and we move,
So then what was the transition then? How did you go from being a waster, like you said, to now being thinking, oh, I need to be responsible with my finances? Would you say it was an age thing? Was there a situation that happened? Was it your parents like telling you, Clarence, it's time to sort your life out? Like, what was the...
Yeah, you know what? It was a bit of the parents one and the age one. So my dad's big on saving, very big on saving money, and would always kind of see every time. It's like every time he sees me leave the house, I used to feel as if he saw like pound signs just coming out of my head. So it's like whenever I come back the next day, it'll be like, I hope you're saving your money. I hope you're really. And it's like he knew I was wasting it.
He knew what you were doing.
He knew, like, no, I'm telling you, they knew. And it's like, I remember one time, I think I left a job just after I finished uni, and I remember I had like some direct debits and stuff, and I was like, oh my days, like, I've only got like 2 months to get another job, because once 2 months goes, I'm finished. And that's when I kind of clicked and said, you know what, this whole saving thing is deeper than just my parents trying to tell me what to do. It's something I actually need to do for my own good. And of course, age plays a part. As you get older, responsibilities, you become more responsible, I would hope anyway. And yeah.
Not always, but yeah, no.
Not always, yeah. Not always. But yeah, like as time went by, I just kind of had like a shift in mindset with it. So yeah, that's that.
Amazing. And would you say your career choice had any part to play in it? The fact that you went into the financial services?
Yeah, definitely not. When I was working in banking, I was still wasting money. So
okay.
And this is the thing. Like I've had the conversation so many times whereby when I used to tell people what I did for a job, they'll assume that I was just really good with money, not knowing that I'm probably worse than them. So, and I guess what plays a part, I know we touched briefly on age. I started in banking when I think I just turned 18.
Oh,
so
wow.
I was really young, so I didn't really have much. I had knowledge of what to do for my job at work, but in terms of actual, embedded principles on how to handle your money, I didn't have any of that. It's only through mistakes and stuff that I gradually learned how I should be handling my money. So yeah.
Yeah, I guess going on to that, how would you say you learned that? What was your information sources? Was it anything you read, anything you listened to, or someone that you spoke to that kind of gave you the ABCs and 1, 2, 3s of how you should be managing your personal finances?
Yeah, a lot of the time it would be people I'd speak to. So being 18, working in banking, I think there was maybe one person in my branch that was same age as me, and everyone else was older. So, yeah, so there were quite a few, let's say, people in their early 30s, late 20s, mid 20s, and they'll give us advice. They'll say, "Oh, look, you should invest in this," or at the time, ISAs. I don't think ISAs were that popular then, but people would tell me to jump into ISAs and give me little bits. I got some bad advice as well. Like my first credit card mess up that I did was as a result of advice from somebody.
Oh,
no. So yeah, so there were people there that could kind of guide me in the right direction. So yeah, those are my main information sources, I would say.
Okay, no, that's good to know. Okay, so then I guess tell us a little bit, or talk to us a little bit about your career background. So you say obviously you're a financial professional and you've worked in banking for quite a while and
Yeah.
mortgages. And yeah, so what kind of led you to the role that you're in now, doing the financial consultancy?
Yeah. So in terms of what I do in terms of CK Talks Money, that is just consulting people, giving people tips, giving people advice. What I do outside of that, I actually work in wealth management. So I work
Oh,
in
okay.
so I work in risk and compliance. For those that are or are not familiar with it, it's pretty much like reviewing regulation against business activity. And what drove me into that area was, to be honest, I didn't want to be customer facing anymore. I'm being very honest with you. Like,
Fair enough.
I was in
Yeah, a lot of
banking.
people.
I'm telling you, like, I was in banking for 3.5 years, did mortgages for 4.5, and I just kind of wanted to learn a bit more about regulation, but more from a back office thing. And that's why I joined the companies that I joined after that. But in terms of CK Talks Money as it is, this came from me just speaking to friends and them always asking me for advice. And then one of my friends said to me, look, why don't you actually set something up where you can literally help people with this? Like, it's not just your immediate, circle you can help. There's so many people out there that you can help. And that's how we are here today. When I started, I didn't know how the journey was going to go. But here we are. I'm here premiered on Tolu's
I
Instagram
just love
Live.
that. You've been doing these lives for days, that's right.
Oh man, but yeah, that's how the journey's been. But career-wise, it's kind of just been a lot of customer stuff, mortgages, personal banking, business banking, then straight into regulation, and here we are today. Yeah.
And those reels that you're doing these days make me really think about my own life. I'm just like, oh my gosh, here we go.
You know what? And
you don't hold back on those reels, do you?
No, not at all. Because a lot of them is, you see how I talk about I was bad with money. A lot of it is a reflection of what I was like.
Okay.
So it's not as if I'm just kind of like, I would hate to be using my friends' real scenarios because they'll probably get upset, but I tend to use my own because when I look back, they are kind of laughable, especially the credit scoring ones. Like, I wish I could show you my credit score from like 3 years ago. Like, I'm sure the number was even lower than my age. It was so mad. Like, it was so mad.
Wow.
But once again, like, you learn, you move, you pick things up, and that's why even just to even see it in green today, it's like, boy, this is
amazing. In just 3 years.
Well, this is it. This is something that I can pass on to people as a result of the principles that I have towards my money, towards debt, and towards my finances. So, yeah, here we are.
So talk to us a little bit about that, actually. So you're saying your credit score was poor, a little bit poor before. Yeah. Now that you've got a really, really good credit score. What would you say the main things were that were able to help you? Just for anybody listening that may be struggling with their credit score and thinking, oh, how can I improve my one? Or thinking that there's no way I could do anything about it. It just is what it is.
Yeah, no, definitely. And you know what? The one word that comes to mind is organization. Because I've never had a CCJ, I've never had a D4 or anything like that. But as a result of me not being as organized at the time, I would miss payments on stuff. So I might miss a payment on a credit card, or I might miss a payment on my EE bill or whatever it is. And I never really took seriously enough the effect that was having on my score, And one thing that people should always watch out for also is that when you miss payments, let's say, for example, you miss a payment by a day, there's some companies that will say, oh, no, it's fine, the payment's been cleared, no worries. But there are some institutions that will still mark that down as a missed payment. So something you really need to kind of, stick to, because I remember at one point, I never really used to even check it. I would even check my credit score that much. And one time I looked at it and I just thought, wow, like, there's so many like red dots. Like, why do I have so many missed payments for stuff that I've already paid for? But the payment might only be like 2-3 days late.
But that was enough to mark it.
Exactly. It's still a missed payment. So that was the main thing that affected my credit score. That was the biggest thing, if anything.
That's amazing.
Yeah.
And that's just something so small, but it can have such a big impact.
Yeah, for real.
Being intentional with it, you can turn it around. Like,
exactly.
Organize, know the dates when things are coming out, making sure things are made in a timely manner can really improve it positively.
This is it.
Okay. All right, cool. So then moving on now to property. So that was the title of today's show. So about, are you mortgage ready? And I think what I wanted to first touch on, or wanted you to touch on actually for us, is things that people should consider before getting on the property ladder. So I'm saying, for example, let's say, for example, I don't have a house, I want to get a house, or I'm considering getting a house. What kind of things would you say or advise to anybody thinking of getting on the property ladder?
Yeah, no, definitely. I guess for me, the biggest thing that people need to really think about is buying a property isn't, and I've said this so many times, but I'll say it again, it's not just the deposit, you know. Even as well as the deposit, solicitors' fees, and so on and so forth, when you get into the house, you actually have a monthly premium to pay. And I had this conversation with a friend of mine because I was saying to him, bro, like, you have to be honest with yourself. Like, is you buying this property the best financial decision? Because you're already telling me that you're struggling with your direct debits already. And you're not really being honest about your financial situation because you really want this house, you really, really want to buy it, but you know that by you paying this mortgage monthly, it's going to have an effect on your disposable income, which you know it's going to affect you. So for me, that's a very big thing. And I think it was just yesterday I said to someone that when it comes to buying, you shouldn't just buy because you can. For example, this 95% mortgage thing here it's opened the gates for certain people to say, oh, wow, like, I can actually buy a property now. And because they weren't in that situation before, they feel like, let me just do it quickly before something else
happens. They change things again.
Yeah, you know what I mean? Let me just get in there. And I do understand that whole logic of, yeah, just get yourself on a property ladder and so on and so forth. But what good is that if you're just buying for the sake of it, and buying for the sake of it, meaning that you maybe buy a place that you don't even really like that much, whereby if you had waited maybe, let's say, 12 months, 24 months, saved a bit more money, maybe even got a promotion at work and were on a higher salary, you could buy that home that you actually want. So I guess a big part of it for me is just being honest about your financial situation and buying when you know that you're ready. And speak to a professional. Like, there's this guy called CK Talks Money. I heard he's amazing. Like, if you want to know, if you want to know what you need to do to buy and how you can prepare yourself, just send him a DM. I haven't spoken to him in a while, but send him a DM. I'm sure he'll respond to you.
I like what you did there. That's so good. That's so good. So slick. Yeah, definitely. They should definitely get in contact. And I like what you said there about counting the costs, basically. So yes, you want to get on a property ladder. Yes, you want to have your own place. Who doesn't want to have their own place? Who wants to be paying rent if they don't have to? But do it when you can afford to do it and when it makes financial sense, as opposed to doing it because you feel like, you know, I'm of age. I'm, you know, in my 30s now. I need to get on a property ladder, or all my friends are buying a house, so I want to buy a house. Or you just feel like, yeah, I want to do it now and maybe not have everything in order in advance. So it's like, no, actually get the foundations in order, get your finances straight, make sure that you can actually afford the property comfortably before going to get one. Because I guess from my own personal experience of getting on the property ladder, that's why I'm talking about this now in hindsight to other people, because yes, I can't change my situation, but if I can advise somebody else to help them make a better choice, then that's what I'm going to do. And with me, when we first bought a house, if we had waited maybe a few more years, we could have saved up a lot more money and probably not ended up in so much debt. But because we were like, no, we've got the money, we've got the 10%, let's buy now. And it's like, we didn't have enough money for all the other stuff that we wanted to do to the property. So I think definitely just do it when you can afford to do it. There's no pressure, there's no timeline, there's no rush to kind of get a property. Just make sure you actually count the cost and do your research. So like TK said, talk to people like TK, actually find out more about what it takes to get a property. There's more that goes into it than just having that deposit. It's a lot. It's a lot. And it's a big experience that you're going to be signed up to for a very, very, very long time. So you want to make sure it makes financial sense. Because what you don't want to do is get on a property ladder, buy a house, and all your disposable income is tied up in that house. Now you can't do anything. You can't go anywhere. You can't go on holiday. You can't go out to eat. You can't buy, do anything. All your money is going on the same mortgage every single month. This same house that you've been like, oh, I can't wait to buy it. Now you present the house because it's like it's eating up all of your money. So yeah, that's definitely something.
Like it will just become a burden. Because the thing is, you know what it is? It's like, for example, I've actually been in a position where I've literally put an offer in on a property, had it accepted. I'm thinking, yeah, cool, I'm loving this. And I literally went to bed that night and I just knew in my heart of hearts that I do not want this place. Like, this place is all right, but if someone asked me genuinely, is this what you want? The answer was no. So I literally called the next morning and said, look, I'm going to withdraw my offer. And let's be real, properties aren't going anywhere. They're always going to be there. Of course, they might not be as cheap as they were when maybe my parents and other people bought properties, but there's always going to be a way eventually that you can
an opportunity.
buy. You know what I mean? You just have to kind of keep on doing the right thing. Those consistent attitudes of staying on top of your payments so your credit score is good. Continuing to save money, you know, keeping your eyes on the market and knowing what's going on. Like, it's funny how many people come to me and say, you know what, like, I've heard what you've said. Yeah, you're saying I can afford this, but I want more. People have literally told me, I'm going to go away now and call you in 3 months. I'm going to maybe, you know, try and get a new job and get a higher salary so I can buy what I really want. And that sort of approach, I can respect it, because instead of you just taking what is available, you're actually striving to get what you actually want and love. You know, that's the difference.
No, totally. I've just seen a comment that's come through. Mr. Money Control says, solicitors' charges are important to be aware of. Yeah, that is one of the many charges that come with buying a house. And not all solicitors are equal. So definitely, again, it's good to do research. No, 100%. Okay, cool. So we've touched on, I guess, things to look at before getting on the property ladder. So these are things that you really want to consider: getting your house in order, making sure that it's something that you want, making sure it's something you can afford to do comfortably, etc. So, okay, let's say I've done that now. I've got my finances in order. I've saved up my 10% deposit. I've got everything that I need to do, or I need in order to be able to go forward with finding a property. So what kind of advice would you say, or what are the things that people need to consider when searching for a property? What are the kind of things you would say that they need to look out for?
Yeah, so well, assuming this person is employed and they're not self-employed, work from home individual, I can say this quite firmly, because this is one of the reasons that I didn't go ahead with the property I was talking about. Transport links can cost you a lot if you're not in the right area, because the area that I was looking to buy in, it went from, if I was going to work every day because I work in the city, it went from something that would be costing me £250 a month living in West London to something that would be costing me about £600 a month.
Wow.
Because the line isn't on the London Underground. So, and that's something that, like, I hear a lot of people say, oh yeah, I want to move to outskirts and this and that. And yeah, like, it all sounds lit until you have to buy that season ticket. This is the thing. Because it's like, transport actually isn't cheap, and the ticket was what I think was going to cost me about £350 to £400 a month, as well as the normal oyster that I'll be paying for Zone 1. So
that's a lot.
Yeah, so it's like, that's something that I'll definitely consider. I always encourage people to look at things from a long-term perspective. So, like, I've had people come to me in the past and say, oh, I'll just buy this property now, and then when I want to, you know, get something else, I'll just sell it. And just sell it doesn't, you know what I mean? Like, and you see,
like you're selling a packet of crisps.
Yeah, like, this isn't Auto Trader. Like, your house can be on the market for like 3 years and you won't sell it, for real. Like, I've known estate agents to say they've had properties in the market for 3 to 4 years because people, because the thing is that people just buy places assuming that because they like it, then the next person's also going to like it if they had it on the market. But that's not always the case. So you need to kind of look at things from a long-term perspective and think, right, cool, where is my life right now and where do I plan to be? Of course, things don't always go exactly to plan, but you can kind of gauge close enough as to where you're looking to be. For example, if you are about to get married and you said, yeah, me and my wife or me and my husband want to have 3 kids, and you're eyeing up this beautiful studio apartment, it doesn't make sense, because it's just like, yeah, it's great right now, but down the line, once again, you're going to have to, you're going to have to move. And of course, before it was easy to say, yeah, I'll just, you know, rent my property out and I'll just buy another one. But then once again, we talk about costs. We talk about additional stamp duty costs if you already own a property. So there's so many more things you have to think about when you're actually buying a property, rather than just, does the property look aesthetically pleasing? If it looks good, great, you'll be happy every day. You can take nice Instagram photos, whatever. But you need to really think about it from a long-term perspective in regards to your personal life anyway.
That's really, really, really good. 2 points actually. Yeah. So how, yeah, that's really good. Transport links, and also how accessible it's going to be in a how long-term
Yeah.
focus. Where do you want to be? Like, are you going to want that house in 5 years time? No, that's really good. Another thing that I would say look out for, something I didn't really take into consideration when I was buying a house. So I guess it kind of goes on from what you're saying in terms of the long-term focus, is when we were buying, at that time we just had one child and he was a toddler, and then I was pregnant. I wasn't even pregnant, I just had a toddler at that time. So it was like, I wasn't really thinking about schools. I probably should have, to be fair, because I had a child, but I wasn't really thinking about schools in the area and that kind of thing. And it's only when my child was of age to I start looking for schools, then I was like, oh my gosh, there's only like 2 really good schools in my area, and it's a really high demand school to get into. Thank God he was able to get into one of those 2 schools. But it's something I thought about when I was looking, but that is the kind of thing you actually want to consider, the area in which you're looking for this property. Like, does it make sense for you in terms of, like you said, transport to work, but also schools, amenities, the areas in the area in general, what's the crime rate like? Just these kind of things. It's good to kind of consider that, definitely, when you're looking for a property.
One thing I would encourage people to do is the property that you actually want to buy or decide to buy, like, make sure you actually fall in love with it because of what you actually want. Because I even have friends who are estate agents, and they are great at their job. They will sell you anything. Like, as long as they know that commission is coming, they will they will tell you that there hasn't been any crime in this area in the last 5 years. They'll tell you whatever you need to hear. But don't just, I'm not trying to bash estate agents here and say that they're all liars. But what I am saying is that if you are going to buy because it's something that you genuinely, for yourself and or for your family, want, not because of how great and appealing it sounds on the leaflet that they're reading out when they're trying to sell it. So that's another thing that I'd say as well.
No, that's very good. And I see Mr. Money Controls added a comment as well. He said, hold on. For those looking, make sure you check the lease agreement, especially the length. Yeah, that's the big one, actually. That is a really big one.
That's a massive one.
Cool. Yeah. Price, I guess, obviously, that's a big one to consider as well, actually. Is it in your budget? And affordability, actually, that's a good one to point out, because one thing, again, from experience, I would say I would do differently if I was to do it again, or when I next go on to buy my next property, is actually working out what's affordable for myself and not necessarily going with what the bank say I can afford to have. So the bank will obviously tell you how much they can afford to lend you, and then most of the time you think, okay, this is the budget that I have for my property. But I would definitely say work out what makes sense for you financially and what you can afford comfortably, as opposed to what they say you can afford, because all they care about is getting their money in it. They don't really care about your lifestyle or whatever, or your goals, your plans, your aspirations. All they care about is making sure you can afford to pay them their money. So definitely calculate the cost for yourself and what's a nice affordable amount for you.
Yeah, definitely.
Okay, cool. So then, okay, next one I've got for you. Next question is things to consider when searching for a mortgage broker. So yeah, what kind of things would you say advice would give anybody to look out for?
Yeah, well, I guess number one, if he's anything like me, use it.
No,
it means that. Let me be serious. What I would say, mortgage brokers, the first thing that comes to mind is cost. There's no, all brokers charge completely differently. There's brokers that don't charge, but they'll only take the commission. There's brokers that charge £500. I know some brokers that charge 1% of the loan amount, depending on the case. So think about the costs, because once again, when we come into all of that cost of moving, you move into the property, that plays a part once again into what you're going to be charged. From someone who was a broker, I would say just ask your broker if they have access to all lenders on the market. Now, that sounds like a weird question, but one thing I will say is that all brokers don't actually have access to every lender in the market. We have brokers which we used to call whole of market, which means that they're under a network and they can, access anybody. High street lenders, specialist lenders, any lender on the market they have access to. But there are some brokers that only have access to about 11 or 12 lenders. So when you go and see them, they'll show you the cheapest rate, but the cheapest rate they're showing you is the cheapest.
Not necessarily the best.
Exactly.
In the market,
So you might actually be selling yourself short by going with that broker, because you could have gone to the broker up the road and seen about 20 different lenders that he or she doesn't have access to. So that's
they're not going to tell you that.
Yeah, and this is the thing. But one thing I would say is, so this is a bit long-winded, but do it anyway. When you do speak to your broker, ask them what network they're part of, and they should tell you that. I don't see why they wouldn't tell you that. And if you literally go on Google, you can find out if they are whole of market or not. You can literally search up the network on Google, and you can literally go on their website, and it will tell you if they have access to all the lenders on the market or not, because that is something that they freely disclose. Of course, the broker won't say that to you because he wants your business.
Yeah.
If you do your own due diligence and do your own research, that is something that you can easily find out. So, yeah.
That's a really good point. Thank you.
Yeah, no worries.
Okay, so I'll just go back to the comments. So Betty Unity says, this issue with the cladding on buildings too. Some properties the banks won't give a mortgage for. Yeah, that is true. And then Mr. Money Control says emergency fund is also a priority. Absolutely. Yeah, definitely. You don't want to be getting on. What was you going to say?
Yeah, just to go back to the point about like the cladding on the building and stuff like that.
Yeah.
That is probably a very, very good point as to why you need to see a broker that's whole of market. Reason being, there's a lot more to mortgage criteria than just your income and where you live and all this sort of stuff. There are lenders who literally, if you're buying a flat and there's more than 4 floors in the building, they won't lend to you. You know, yeah, like there's lenders that, for example, will lend different amounts depending on if it's a new build or whether it's not. Like, there's so much in that job as a mortgage broker that the consumer doesn't actually see. But this is why seeing a broker is so key, because criteria is more than just your affordability and how much you can lend. There's a lot of it can also be to do with the property in itself. You know, there are some properties that are like concrete build, they're not made out of brick. Lenders won't lend to it, so you then have to find a specialist lender who will then lend on that property. So that's a very good point, actually, in regards to the property.
Thank you.
I don't have.
Sorry, that was sorry, man. Just watch.
Halifax. What? Mr. Money Control said Halifax led to black people.
Apparently so.
Well, because of that guy from the adverts over the years.
The guy that used to sing.
Yeah. I think we had the same issue. The first broker we used had a limited amount of access. I wish I knew this info back then. Yeah, exactly. We didn't know back then, but we know now for the next one.
You know now.
Okay, cool. So then you talked about this earlier, actually. So I just want to hear a bit more about your views on it. And this is the whole 95% mortgages thing. What do you think about it? What are your views on it?
Yeah,
what are your recommendations when it comes to it?
Yeah, my biggest recommendation is, my biggest and probably only recommendation is have more than 5%. You know, I've said this a couple of times on my page as well, because I feel as if that 95% LTV, 95% mortgage advert kind of came out and told people, as long as you have 5%, you can get a property. And it's like people forgot about everything else. They forgot about the criteria. They forgot about the income multiples and the affordability. They just assume that if I have 5%, I can buy. Now, let's push criteria to the side for 1 second. So I actually made a video on this. And the way I looked at it was, you go into a car dealership, you have 10 grand to your name. Not 10 grand and £200, you have £10,000 to your name. You're not going to go in there and buy a car that's £10,000, because you know you're going to have to get road tax. You know you're going to have to insure your car. You're going to have to, get some petrol
in the car.
You know what I mean? Unless you'll just go home and leave the car in that showroom, So it's like there's things and costs that you need to consider. I think Mr. Money Control earlier mentioned solicitors. Solicitors can be about £1.5 grand. I've seen people pay 2K for their solicitors' fees for their property. So these are all fees that you have to take into consideration. So if you do have the 5%, great start, honestly, but be aware of the other costs involved in the property purchase. But the 95% mortgage as a whole, I think it's a good idea. I think as long as people can, as long as, like we've been saying, that people are actually buying places because they like the place and not just because they can, then yeah, I think it is a good idea. And I'm not against it, but I'll say I'm pretty much for it for people who can actually afford it, not people who are just buying because it's available and because they can now, you know.
Okay.
Yeah.
No, that makes sense. That makes sense. Yeah. Okay, so then the next question I have for you is 25 years is like the conventional mortgage term, I think, correct me if I'm wrong. So then what are your views on longer term mortgages? So like you've got 30 plus years, 35-year mortgages even at times. Like, is that something you recommend, or what are your views when it comes to that?
Yeah, and I guess when it comes to mortgage, the biggest word you used there was recommendation. Because if I'm speaking to somebody who, for example, I've had clients in the past who they might be self-employed, they might be builders. And they might be, I don't know, 30, 35 years old. And the recommendation that we make always has to be realistic. We couldn't just put a number on the term because it was going to be in line with the monthly payments that they wanted to pay. If you do the maths on that and somebody is 35 and they now want a 35-year mortgage, the whole idea of that term is that when it comes to residential anyway, is that by the time that term finishes, you are going to be about to retire or retired and your mortgage will be paid off. Now, if you have a certain income at 35, you're not going to be earning the same, or I don't know, in some cases, you won't be able to be doing the same work you were doing when you were 35 when you were 70. So these are the sort of things that we have to weigh up. I'm not against 35-year mortgage terms. If it works for that individual and it works for their specific circumstances, then why not? The conventional number is 25, and I never understood why that was anyway. But I guess it just depends on the person. I've done mortgages for people that are 30 years. I've done 15 years, you know? So I guess it just depends on where they are in their process and what their plans are for their money. So there's no right or wrong answer for that. Yeah, literally. It's all subjective. Okay,
that's good. That's good to know. It's interesting. Okay, cool. So then next question I have for you is about auction property. So this is something that we was looking at quite a lot actually when we first was going to buy a property. Thank God we didn't go down that road because we didn't have a clue what we were doing, and that would have just been a hot mess. But I'm just interested to know what your views are when it comes to buying a property on auction, and any advice that you have for anybody wanting to do that.
Yeah, cool. So if you're buying is this assuming that it's their first property?
Yeah.
Yeah, cool. So if it's your first property you're buying at auction, if you have somebody, alongside you that is experienced and that can guide you through the process, and if they have builders at the ready, electricians at the ready, plumbers at the ready, because when you're buying at auction, you have to pretty much be ready to take what you're given, because once you get the property, once you say, yep, I want to buy it, with a mortgage, if this hasn't changed, you usually have a very short amount of time. I feel like it's 30 days.
It's like a month.
To get your mortgage offer. Now, in an ideal world where your solicitor is super fast, where your mortgage is CK, and where your mortgage broker is CK, and everything is going to go swimmingly perfect, then yeah, 30 days you'll be fine. But there are situations where mortgage offers can take longer than that. And for those who have bought at auction or gone to auctions, you will know that when you buy at auction, a lot of the time the auction house will ask you for a deposit towards the property. And if you don't get your mortgage offer in that 30 days, you actually lose that deposit, you know? So it is quite risky, especially if you don't know what you're doing and it's your first time and you're alone. But if you're a first-time buyer and you have somebody experienced on your side and they can guide you through it and help you, then I guess why not, you know? Yeah.
No, it's good to know. Okay, cool. So actually, my last question I have actually is about basically kind of bringing together all of what we've discussed. So it's like, okay, I've saved up my emergency fund. I've got my deposit. I've got my emergency fund. I've done my research. I know what I'm doing. I found a property that I want. I've spoken to CK. CK's like, yeah, I've got you, kind of thing. Sorted. Yeah, so it's all good so far. So then now I've got a couple of options on the table. So one of them is these are the two offers on the table. So I've got a 5-year fixed term mortgage with a slightly higher interest than a 2-year fixed mortgage for the same 25 years. Which of the two would you say I should go for?
Okay, so you've got everything together. You've been given a 5-year fixed, and the interest rate is slightly higher on the 5-year than the 2-year.
Yeah.
Yeah, in comparison to the 2-year. Okay, cool. So I don't want to get too technical here, but when we do mortgages, it's always based on suitability. So when I give that mortgage to Mr. Smith, I'm saying, cool, I'm giving this mortgage to Mr. Smith based on me doing a full review of his circumstances. And because of what he said, this is what's best for him. Now, if you plan to live in a property long term, and the main word being long term, you say, cool, me, my wife, and my 2, 3, 5 kids, whatever, are moving in, and this is our family home. In that situation, I don't see anything wrong with a 5-year. If this property is the person who is just buying for the time being, and they're the person that is of the impression that, yeah, I'm going to be able to sell my property easily whenever I want, then probably a 2-year. Because those terms, especially, I think you said fixed. So if it's fixed, you're going to keep that rate for that period. That period that's on your illustration is yours for the next 2 or 5 years, or in some cases 3 years. So it is pretty much case by case in a way that it depends on that person's circumstances. But I would more of the time, I would recommend a 2-year. My reason for that is because I've seen too many customers change their mind. I've seen people tie into 5 years, and then they hear some news on the TV, or they see their friend doing something, or now they want to do a loft extension, or they want to go and, you know, do up the kitchen or the bathroom, and they want to release equity. Cool. Now they want to remortgage. Okay, fine. But when you tie into a 5-year, if you try and come out of that mortgage during the 5 years, you have what we call an early repayment charge. Exactly. And those penalties aren't low. They're like a good chunk percentage of your loan amount. So that's why a lot of the time I would ask people questions around what their plans were. And if they weren't 100% sure that in between that date and the next 5 years, they weren't going to need to take money out of the property, move, or do anything with the property, then I would usually recommend a 2-year. So I guess it depends on your plans. It all depends on your plans.
Going back to the long-term plan thing again.
Oh yeah, and this is one thing that I'll kind of leave with you today, Tolly, in regards to mortgages, is that, and I think I've said this before, that you should never choose a mortgage or make a decision based on your friends or what you've been told, because everyone's circumstances are completely different. Even 2 people with the same salary, with the same credit score, whatever, the mortgages they'll go for are different, because it's the same salary and same credit score does not mean that you have the same plans for the future. So that's gonna determine which way you go, you know?
Yeah, no, that makes perfect sense. It's really good advice. So, yeah, I guess that the overarching thing that you keep basically hammering home is it's got to be right for you. So everyone's situation is unique. So there's not a one-size-fits-all approach that you can take when it comes to mortgages. So don't think that, oh yeah, my friends have done this, so I should do that too, because it may have been right for them at that time, but it may not necessarily be right for you and your financial situation or your financial future plans at this time. But yeah, no, that makes perfect sense, and that's really good advice. I'm just going back to see, I missed a comment from Mr. Money Control. It says life insurance is alongside a long-term mortgage, or life insurance alongside a long-term mortgage is important. Yes, we cannot predict what will happen in the future. Absolutely.
Yeah.
UNT says cash better for cash buyers at auction. Yeah, auction's better for cash buyers. Absolutely.
Fully agree.
Yeah. And then Mr. Money Control says case by case. Yep. So yeah, really, really true. And switching lenders, providers. Yeah. Loving what you guys are doing. Oh, thank you, Tanem. Appreciate it. We're actually coming to close. Yeah, we've got about a few more minutes actually. So let me see if I have any last questions that I can answer. If you guys have any questions for Clarence before he goes, we've got like 6 minutes left. Well, if not, we can wrap up early. But if you have questions, let me know. Let me think if I have any more things to ask you. I guess, yeah. So CK Talks Money. I totally messed up your name at the beginning, so forgive me for that. At the beginning of the live, I actually was all over the place. But yeah.
It's cool.
What would you say is the plans for CK Talks Money for the next?
CK Talks Money.
Yeah, I mean, you were doing money talks last year, but then you stopped it back for us.
Yeah, you know what? I started a new role in February. I'm being
Congrats.
completely, thank you. Like, I'm being completely transparent, and
Yeah.
I genuinely didn't have time for all the lives. I didn't, and I think that anyone that watches my stuff knows that when I do it, I like to come with energy. And
Yes.
if I can't come with that energy, I don't feel like I'm doing it enough justice. So
I hear that.
I kind of just thought, you know what? Let me just take my foot off the pedal a bit. I'll give them small reels here and there. But like, I am working on stuff, but there's stuff coming. There's stuff coming.
Good.
Yeah, there's stuff
No,
coming.
that's good. That's good to know. Now, it's all about balance, isn't it? Like
Exactly.
I said, a new job, you're like, okay, let me show them what I've got here. And then once you start getting settled, and it's like, okay, then no, I totally get it, totally understand it. But we're definitely going to be watching to see what's in the pipeline for you. And I guess just final closing, any final words or encouragement or thoughts that you want to share? In fact, actually, before you do that, we've got a question, and then I have a question too. It says, what are some misconceptions of obtaining a mortgage?
Misconceptions of obtaining a mortgage. My biggest one is probably, I know we've kind of hammered it in this video, but my biggest one is probably the people that think that just because they have their deposit that they can buy a property. Not just because of the fees involved. There are a list of reasons why your mortgage can be declined, like loads. You know, it could be to do with your credits. It could be anything. Sometimes it might not even be you. It might even just be the property. You know, so it's like people need to realize that no mortgage is guaranteed until you have your mortgage offer, and they say, you know what, there you go, you're good. Anything up until that, just don't get your hopes up too much.
Up too high.
anything can happen. You know, so that is probably the biggest misconception. People that think, I have people come to me that they might even DM me and say, oh yeah, I've got this, and that. Does that mean I can definitely get the mortgage? And I can't say yes to that. You know, it depends on how the process goes, the property that you choose. There's a lot that comes into it.
Okay. Sorry. Don't follow friends. LOL. Yeah, okay. Great advice.
Yeah, for real.
Sorry, my scrolling thing is not working for me. Okay, there we go. So, what are your thoughts on interest rates as we come out of lockdown / COVID?
Yeah, to be honest, because of the new rates, not the new rates, the new products that come into the market, I don't personally, anyway, feel as if there's going to be anything of a massive change in rates. Rates have gone up. You know, they have gone up, especially with these new 95% LTV deals coming in. Even the deals that you get now for 10% deposit, they're higher than what they were when even I was doing mortgages about 2.5 to 3 years ago. So I don't think there'll be any drastic change or any real drastically noticeable change, but I would say they will be a little bit higher than what they were a couple of years ago, because they already are, to be fair.
Okay.
Yeah.
Another question we've got is, how many years of credit history are lenders reviewing before borrowing?
Okay. You know what? Depending on what your credit history looks like, depends on how far back they will look. Really, they look at everything. Let's just be frank. They look at everything. Of course, you have defaults and CCJs. That there are lenders that if you do have a CCJ and it's been settled and it happened, I don't know, 3 years ago, they'll ignore it. You have lenders that if you've had a CCJ at all in the last 3 to 4 years, they will completely ignore you. So once again, when it comes to these mortgage products, it all depends on what lender you use, which is another reason on the lists as to why I say see a broker, because your bank won't tell you this. A majority of the time, if you are somebody that has adverse credit, you don't want to be going into your bank anyway. Another way to kind of, run it is that if you've had, I don't know, 3 car accidents in the last year, and then you're on Compare the Market and nobody will insure your car, you're going to go to an insurance broker. Why? Because they're going to be able to show you insurers that you can't see on Google or on Compare the Market. So it all just depends on who you end up using.
Okay. Yeah. Cool. And I think this is the last question that we've got. It's from Wigs Inc. It says, do you think house prices will come down after stamp duty freeze finishes?
Will come down? You know what? I hate answering this question because I feel as if someone's going to write it down in 2 years, say, but CK said. But
yeah.
You know what I mean? But honestly, I don't think they will come down. I don't feel like they will. If they do come down, I don't think it'll be because of the stamp duty freezes. I just feel as if they're gonna not drastically increase, but stay at a sort of at a level that they are right now, and maybe go up a little bit. But I don't think they'll come down. If the question is will they come down, I definitely don't think so.
Okay.
Yeah.
That's not the answer you wanted to hear, is it?
Yeah, sorry, Wigs Inc. I'm sorry.
No, brilliant. Oh my gosh, thank you guys. You was amazing. It's been a really, really, really good live. I guess if you have any final closing remarks or words of encouragement, or what I was going to ask you before these questions started coming in at the end, was anything that you're reading now, or any resources that you could recommend to anybody. So what book you're reading now, or audio book or podcast, or anything that's educational, that's helpful, that you can recommend to the guys?
Yeah, you know what? The book I'm reading right now has nothing to do with property. In fact, I should really finish that book. It's called Great at Work. So I'm about 3 chapters in. I'm behind on what I told myself I'll be doing, but it's okay. But
who's it by?
It's by a guy called Morten Hansen.
And what is it, like a self-development type book?
Yeah. It was actually recommended to a friend of mine who works in a similar corporate environment to me, and he just said, "Look, like read this book. Like it's really good." So I bought it, and so far so good. But yeah, in terms of what to read, you know what? Yeah, I'm not a big book reader, which is probably why I'm struggling to finish this book. But what I would say is that if there is anything that is in your mind every day, let's say it's, I don't know, stocks and shares, whether it's crypto, whether it's mortgages, property, or whatever, I would say use the internet to your advantage. You know, Instagram's a lot more than just the shade bar and I'm just bait. There's a lot that you can learn. I'm telling you, like, and listen, I follow those pages. And they're not bad pages. I follow them. Yeah. Like, you can really use the internet to your advantage if you use it properly. So I always try and encourage people to, you know, like, even if you are on social media a lot, that's fine, but let some of that be educational. Let it be helping you grow, and not just something that's taking your time just to scroll and to like photos. So that's what
I heard that. Yeah. That's really good advice, guys. Balance. It's all about balance.
It's all about balance.
I guess, any final words, final remarks, advice, words of anything you want to plug before we wrap up?
Yeah, you know what? I'll plug Tolu, of course. Tolu.
Thank you.
I have to plug Tolu. Thanks for having me, for real. And like I said, I will be releasing some new content soon. So watch out for it. I'm not on any other platform really. I'm mainly on Instagram, so feel free to give me a follow. And yeah, I guess that's that.
No, brilliant. Yeah. Oh no, thank you so much for coming on again, Claps.
No worries at all.
And I'm seeing all the comments. Everyone's saying great live. So you've done a good job. I'll pay you later.
Thank you very much.
Enjoy your evening, guys. Okay, see you next week.
Take care.
Take care. Bye.
Bye.